Good morning, day traders, and welcome to Market Minute, a hedge fund trader's technical analysis of the stock market for February 28th, 2022. If you enjoyed this video, please like and subscribe. Let's get after it. So SPY gapping down here after Friday's relatively low volume grind up. Fridays and Thursdays action starting to really remind me sort of this March 2020, right, end of February 2020 action, right? High volume pullback there, back inside the Bollinger Band. Then that, low volume grind up, right? Full body. It's going to eventually, hopefully, well, not hopefully, but leading to that sort of a bear flag sell-off, right? Starting to feel like a very similar story here, although maybe slightly more dramatic candles. So I'd like to see how this thing behaves. Any gap down here, right, creates momentum or creates that bear case under that, say, 427.68. And any bull case kind of starts above that 438.50. Sort of opening up in this no man's land, right? So SPY could be relatively challenging for us to trade today. QQQ giving us a slightly easier story here to the upside, right? Better looking candle, maybe not a very good volume profile, but maybe a little bit more hope. Would like to see this thing break up and over that 347 for a move towards that 350, 351 area. Bear case begins under that 336.90, right? Call it 337, down towards that 335, 333.60 zone. Eventually could have room down towards that 330 if we can get that decent size flushed, but we need to make sure that the volume profile steps in and defends any move in either direction. Apple, right, very similar here to QQQ, but maybe a little bit stronger. Not as much of a gap down here this morning. So if that momentum can step in and push this thing over that 165.30 area, Apple certainly has a lot of room up towards that 170 target. If we can break down under that 159.70, then we've lost that trend line again and have a lot of room down towards that, say, 155 and then potentially that 150 zone. Thursday's really high volume melt up, right? Grind up. Should keep things relatively or give us a little bit of a bullish bias here. But let's see how this thing wants to shape up for the remainder of the day. Tesla may be the best looking setup here of all the names. You can kind of look at Friday's action as a little bit of a low volume pullback, right? Nothing particularly convincing there. And now looks like it wants to gap up and over. Our objective here is to see that 820 area break, and then Tesla starts to move like $10 at a time towards that 860 area. Under 780, right, moves about $20 at a time, right, something along those lines, towards that 730 mark with a few stops along the way, and I'd expect resistance at that 750 mark. Then finally, right, last but not least is Microsoft. Microsoft may be the easiest one for us to go short on here today, right? Looking for breakdowns under that 291.20 for a move toward that 290 and then that 288, 285 areas. Looking for breakdowns, right, like I said, under weakest volume profile, right, maybe the most reasonable looking gap up. I've been struggling so much at this 300 psych zone. So it'll be like 300 rejection, right, gap down, low volume divergence breakdown, and then it can flush. So that's really my game plan here for today. There's still a lot of sort of headlines, still a lot of news. So I expect a choppy, challenging market. And I'm going to sit on hands and be relatively patient until there's something immediately obvious. So that's how I plan on dominating today's action. If you enjoyed this video, please like and subscribe. If you want to follow my day trades live, you can join at dtrtrading.com. Otherwise, I'll see you all tomorrow for the next Market Minute.